Okay, take a moment, look at the disclaimer. This content for educational, informational, entertainment purposes only, and nothing should be taken as a recommendation of buy, sell, or hold any securities at any time. We're here just to spread the word of how BTA analyze the market, how we look at the market. Anything. This is Rod from BTA. Okay, we're going to start off with, we're going to now analyze the major market index itself. It's a few things that happened over the last 2 to 3 days, but it's not positive. Okay, so let's just get that out the way right away. So it's not positive at all. All right. So here is the Dow Jones Industrial Average, right? And let me expand this just a little bit. All right, this is a daily chart of the Dow Jones Industrial Average, the index itself, the actual index itself. And we had our sideways consolidation a week ago. All right. So right here, we had our sideways consolidation right here. Right. We consolidated for almost 10 days. And then we sold off after the CPI report. Now, yesterday, this is the price action from yesterday. The Fed gave its interest rate decision, and we put a video up on the YouTube channel about the interest rate hike. It was 0.75%, right? So 0.75%, almost 1%, but not a full 1%, right? But the market really didn't really go anywhere. It traded up and down, but it ended up, didn't really do anything that can give us a clue that maybe the market wanted to rally or sell off, right? But the one thing that Lois and things of that nature was telling us that, and being that prices were stuck below a downward trending 5-day moving average, it told us right there that it's best to wait. Okay, it's best to wait until the chart improves, until it changes. You can't trade against a downward 5-day moving average. You want to go long in a stock that's below a downward trending 5-day moving average. You're looking for a world of hurt as far as I'm concerned. Didn't really go anywhere. It went up and down, but it closed kind of right where it opened up a little bit. Only thing I can say, it held this overhead resistance area. It closed above that line a little bit. But look what happened today. It gapped down. Okay, it gapped down and it traded down hard. We was below a downward trending 5-day moving average. All right, I can't say that enough. We was below a downward trending 5-day moving average. What can you expect to happen? All right, so that's the Dow Jones Industrial Average. But it's something right here that's important. You see this really thick red horizontal support level right here? This really thick red horizontal support level. That is the high. That's the high level going all the way back to 2020, March 2020, right before the corona collapse. So in other words, we're back to the 2020 levels. If I bring this all the way in and minimize it a little bit, you can see here. Let me minimize it a little bit. Let me try to bring the chart up a little bit so you can see it. You can see here, if you look all the way back to this side, we're back. That's the high. The market ran up and hit a high. At that time was the all-time high back in March, late February 2020. Okay. Right into March, the beginning of March 2020, that's when the corona hit the US and we fell apart. Okay. So we're almost back to that level. Listen, this has to hold support. All right. If we break below that, it could be a lot more, downside risk involved. I mean, we got some gaps here, okay, that we may go back and trade below it and fill them. Okay, we still have got a gap here where prices gapped up that has never been filled right here. Okay, it's never been filled since the rally started back in 2020. So we can trade back down and fill this gap right here. All right, this is not good. If we break below this level, this is going to be a level that can tell you a lot. All right, if we break below that, that's a problem. All right. That is a major problem. So let's see what happens. That is an area we have to keep an eye on. We have to keep an eye on that, our good eye, all right, on that one. Make sure that we watching this, we monitoring it, because if we break below that, it could be a problem. All right. And I hope no one got excited yesterday about the little Fed decision. And I also said at any moment you could get a relief rally. So we did our short positions. Uh, we got out of those short positions, right? Because you never know if the market is going to pop after when the Fed makes its decision on those interest rates. And now is not a time to get back in and start shorting the market. This is a wait and see. What we want to do is see if we can get a consolidation, and then maybe or start setting up some kind of pattern, some kind of tradable pattern. All right, go back on the website and look at the patterns. Okay, and matter of fact, if you go back on the website, we got different categories there where you can see. Okay, you can see all of the different webinars, those meetings that we had. Okay, and you can be able to see them. And you'll be able to choose which one that you want to look at. And you don't have to look through all the 200 different. So let's look at, this is a daily chart here of the Standard & Poor 500. Now, look at today's action. Look at today's action. I'm gonna bring the home. Give me 1 second here. This is today's action right here. This is today's action right here. You see, we broke out of the consolidation, traded down. Yesterday was the Fed decision right here. This is today's action right here. Okay. We gapped down and traded down hard. Now, it's the same thing. We have to be careful. We're not near on the Standard & Poor. We're not back to those 2000 highs. It's not that far away, but we're not there yet. Okay, we got another 200 and something points on the Standard & Poor. Here it is right here, right around 33.89. Okay, we could trade down, but hopefully this level will hold at 3,500. We break below 3,500, break below this downward trending trend line here, going back all the way back to the March, all the way back to the all-time highs here. This trend line is going back all the way to our all-time highs back in November of last year. Okay, and we break below that downward trending trend line. If we break below this downward trending trend line, break below this horizontal support level here, we could come back down to here. We don't want to see that. All right. If that happens, I guarantee you that the Dow Jones is filling that gap that I just showed you. The Dow Jones. If I bring this over here, okay, give me 1 second. Let me expand this. This is the website, right? This is the website. So, and what you want to do is, if you go to products and services and go down to where it says recent webinars, hit that. All right, click the recent webinar button. It's a little slow because I'm using a lot of the bandwidth here. And if you scroll down a little bit, right where it says recent webinars, right here, right where it says recent webinars. If you look over to the right, right here, it says all categories. It says all categories, right? If you click on that button, if you click on that button, which I'm about to do right now, you click on this button, it says all categories, you get a drop down. See that drop down? You get a drop down right here. If you scroll down this drop down, you're going to see all the different categories of the webinars that the recent meetings that we had, right? Well, not only recent, over the last 2 years, it's over 200 something videos on here. I mean, it's so much. If you go through all these videos, I guarantee you, facts for sure. All right, you're gonna know it's gonna be. You should not blow up your trading account. You should not have that kind of a problem. I mean, it's all right here, and we're gonna be adding more. You got the moving average. It just if I click on this moving average one, you can see we got different parts. Okay, we got. Let me click on the one that says moving out. Yeah, I did. Sorry about that. Look, part 6, part 5, part 4, part 3, part 2, part 1. We explaining the entire strategy, okay? Exactly how we use the MACD, the entire strategy. If you go to the fractals and pivot points, we got it here. All different, all 6, 7, 8 different parts. We explain exactly how we use fractals and pivot points, okay? To the T. Everything is there. We took our time, went through everything, all right? It's all there. So all you got to do is go to the recent webinars. So, because I know it's kind of hard if you just go to the recent, if you go up to the top and hit recent webinars, then it's a lot of webinars here. So if you had to scroll through here to try to find what you're looking for, it would be kind of difficult, right? I understand that. So that's why we put it in different categories. So just go to the recent webinars page, which you're on right now. Go right down to where it says recent webinars right here, and just look over to the right where it says all the categories, and you hit that little drop down. And when you hit that little arrow, that little drop down arrow is all going to be right here. We got the Bollinger Band, which we started. We only did part 1. I'm going to start doing part 2, part 3, and just posting it up here. So we're doing a lot of videos now. So I'm going to have to just jump on this and just do it in between our meetings and put it up here. All right. So, but that's where we stopped at. We got the ADX, which is powerful, right? We got all the different parts of that. You can review this thing and you'll be up to speed, right? It's a lot of work. I know. It's a lot of work, but I don't know anybody can make a lot of money without having some effort involved, okay? It's going to be some effort, y'all. I mean, anybody tell you anything different, it's a lie, okay? I'm not here to lie to you. Anybody been around me for the last 2 years to tell you, I'm just going to give you the straight up truth, whether you like it or not. I'm not here to lie to you. So you got to put some work in. There's no get rich scheme here, okay? You cannot get rich quick. You can get rich, but I don't know about quick. You got to put some work in, all right? So now that's that. So you go to the browntradeacademy.com, go to the recent webinars, hit the recent webinar button, and go down to and when you get on the recent webinars page, look over to the right, hit that little drop down, and you're going to see everything that you need to see right there. Okay, so now I just wanted to get that out of the way. Back to the chart. All right, so this is the daily chart, the Standard & Poor's 500, the actual index itself. So like I said, we didn't get back to those highs of March. March 2020. So, but right now we broke out of that sideways consolidation and we're trading down. We've broken below the internal trend line. We're coming down to the trend line of the lows. Look, this is a wait and see for us. It's not a time to try to go out and make a whole lot of money. You can get your head handed to you. This is a wait and see. Because if you try to short it right now, as far as we're concerned, if you try to short it right now, you could try to short this thing and then get caught in a relief rally because you're hitting some very low levels here. So you never know when it's going to find support and bounce on you. So you got to be careful. I'm telling you, you got to be careful. Look, this is not like what we had last week. Okay, last week was a different story. All right, that was different. It was a proper setup. We had consolidation for almost 10 days, sideways consolidation. All right. This is not that, okay? This was a high probability short, okay? Very high probability short, okay? This is not that. You got to wait for the opportunity. For far as we're concerned, look, we know this is not financial advice. We got that. But, I'm just saying, I'm telling you how we look at the market. this is not a high probability short, okay? Because at any moment we could hit these resistance levels and bounce on you, okay? It can break through it and you'll be happy when you go to bed. And all of a sudden it bounces up in the morning and it gaps up on you. You say, oh, what happened? Well, you just broke through just a little bit and the next day it gapped up on you and you wake up, you're down $7, $8, $5, $10. Who wants that? I'm telling you, this is not the kind of stuff that you can guarantee that it's gonna. Well, you can never. There's no guarantee. It's not the kind of stuff that you can have a high probability chance that it is going to follow through. Okay, into the next day. You just don't know. I'm telling you that this thing can get a relief rally at any moment and bounce. A relief rally. What I mean by that, we got a bear market. We trading down. We could get some. We trading down. We could get a relief and it starts to rally back up. Not to say we're going to have a new bull market, but it could be a relief rally. And that type of stuff can hurt you bad. Okay. So I'm telling you, there is no high probability trade right here. This is a wait on to sit on the sidelines as far as we're concerned until we could get some kind of setup that we could go in. We're not gamblers. Keep telling you that. We don't gamble. We trade with the highest probability of success. This here is breaking down. This is the daily chart of the Nasdaq right here. We haven't hit these lows. We haven't gotten there yet hitting this support level rather. This is the high going all the way back to the same March 2020. That's where we at now. We're back to the high, the all-time high of March 2020. Okay, that's where it's at. That's just where it's at right now. And this should hold as some key support. We start breaking it. I'm telling you, look, we break that low. Look, I mean, what could stop you from going all the way back to the lows of the Corona collapse down here? I mean, look, if you break this high right here, not low, I'm sorry, if you break that high from March 2020, look, listen, anything can happen in the market. You break below this high, the recession hit, we get into some type of credit crisis or something. You look, you wake up a couple of weeks later, a couple of months later, you be down here to the low of the Corona collapse. That's like 6,000 on the Nasdaq Composite. We're looking at the Nasdaq Composite right now, the actual ETF. So you break this, I mean, who knows how low you can go? You just broke key support. All right, I'm just warning everybody. You're breaking key support. So a long trade could be dangerous. I mean, that could be really, really dangerous. Okay, so that's the Nasdaq Composite. Now, let's look at the indexes with our moving averages real fast. Look at the indexes with our moving averages and see how that look. Okay, give me 1 second. 1 second here. All right. So here's the index of this is the actual index itself with our key moving averages on there. Tanisha or Bryson, can y'all hear me? I want to make sure I didn't lose access to the internet right now because my internet has been a little spotty today. Can anybody hear me? Can somebody tell me?
Can hear you.
Okay, great. Thank you, Tanisha. Appreciate you. All right. So this is the Dow Jones Industrial Average, right? This is the actual index itself with our key moving averages, right? We're going to have to move this vertical line. This vertical line was our first day rally attempt. We broke below that. The rally is dead, right? I don't know why it won't save there. I'll work on that later. But now we had a new first day rally attempt yesterday, but today we broke it completely. So there is no rally attempt right now, right? Because we had the first day rally attempt yesterday. Let me expand this a little bit, make sure y'all can see it. Right here, this would have been the first day rally attempt because yesterday we closed up after getting into the new correction. We broke below this level, which was our original. Well, on the Standard & Poor's, you'll see we broke below the low of the first day rally attempt, and we did it here also. So the rally was completely dead, right? But after we had our downtrend and when the rally was dead, well, yesterday we had an up day, right? It closed up. So that would have been our new first day rally attempt. But as you can see, today we broke below that low. So now we're looking for a new first day rally attempt on the Dow Jones. It's dead. So the rally is dead. The rally attempt is dead. we're back into the complete downtrend. The count is off, looking for our follow through day. But as you can see, the white line here is our 5-day moving average. The 9-day moving average is the green and down. The 9 is crossed below the 21, right? The 9 is crossed below the 21. That's our bronze cross. Okay, that's the start of a lot of downward momentum for real. Okay, the 9 is crossed below the 21. Not good. Okay, when the 21 crosses below the 50, that's our silver cross. We got that a long time ago. Bad news. And when the 50 crossed below the 200, we call that a death cross. Even more bad, right? As the name says, death, real problems, right? So the 5-day moving average is pointing down. Look, we're trading below and we're closing below a downward trend. Try to buy something in this environment, you know, can't say I didn't tell you. You might get lucky, but I don't gamble. Okay, so I'm not trying that. All right. Now, here, let's go to the Standard & Poor's 500. All right, the actual index itself. Well, my little theory of getting back to the highs of the inverted yield curve looking like, might not happen. All right. History is not going to repeat itself. Right. But here's the inverted yield curve date, right? Right here. I still got it on this chart. I'm still believing that in history that we're going to go back and hit these highs up here. I know y'all saying this man has lost his mind. It won't be the first time I've been called crazy. But hey, look, I'm saying every time in history we have went back and hit those highs, all right, and went higher. But it's looking kind of dim right now. Okay, but here's the daily chart of the Standard & Poor's 500 actual index itself. This is the day. This vertical red line here is the day we had the inverted yield curve. Okay, this is the high right here, 46, 4,637. Right now we at 3,666. Okay, almost 1,000 points to the upside. We would have to go to hit that high of the inverted yield curve, the date of the inverted yield curve. Every time in history before we had the recession, all right, we had the inverted yield curve. The market trades back up. Okay, hits the high or higher than that date. So we had to go all the way back up here, get higher than, or at least test the highs or get higher than the date of the inverted yield curve. Okay. Shortly after that, we'll see the unemployment numbers start to tick up. Okay. Unemployment numbers start to tick up. Layoffs start coming in, job losses. And then, bingo, recession. And then we get the collapse. All right. I'm thinking that that's still going to happen. It has happened every single time. Every single time it has happened. Well, I know that's a long way to go, I have to admit. It's looking kind of like this is going to be the first time in history that it didn't. Okay. To get back to those highs, we got a lot of work to do. Okay. So this is our follow through day. All right. That's gone, right? Because the follow through day is dead, right? So that's done, right? We understand that. And so this is our follow through day. We broke below that. We broke below the low of the first day rally attempt. We down here. Yesterday would have been a first day rally attempt again. But like I said, we broke below the low of the first day rally attempt. That's over. The count is dead. We start the count all over again. But look here. All right. The 5-day moving average, downward trending 5-day moving average is right there. Okay. We got a downward trending 5-day moving average right here. That's a problem. All right. The downward trending 5-day moving average is a problem. Okay. So you don't want to trade against that. That's just straight up momentum to the downside. You don't want to trade against that. That downward trending 5-day moving average, you don't want to trade against that. Okay. You just don't want to do it. That could be dangerous. All right. So we're going to wait and see what happens. But this is a lot of momentum to the downside. You got the 5-day moving average here, the white line. You got the 9-day moving average here, the green line. You got the 21-day moving average here. Look at that 50-day moving average overhead pointing straight down. This is a lot of downward momentum. I'm telling you, look, it's not a high probability short because, like I said, you can get a relief rally at any time. But but it's definitely not a time to go long. Did you hear me? Okay. Did you hear what I just said? Okay. We setting up a watch list. I'm gonna be sharing those stocks with y'all. We're gonna look at one. We're gonna look at one toward the end of this video. Okay. But is it a time to buy that? We're not buying that. Not right now. Buy what? The market is selling off like crazy. You trying to get yourself hurt? You want to give away money? Got no money to give away? Kidding me? Got kid to feed. You understand? You got no money to give away. All right. So look, here's the 5-day moving average right here. This is the daily chart of the Nasdaq composite with our key moving averages. Look at that downward trending 5-day moving average. We're below it and closing below it every day. Look at that bronze cross, 9 cross below the 21. Look at that 50-day moving average, that red line pointing straight down, trending down. And over the top, you got your 150-day pointing down, your 200-day pointing down. You got everything pointing down. We're going down. Okay? You get it? We're going down for right now. So try to buy something if you want. Okay? This is not financial advice, but it would be wonderful if it was. Because if you do, you wish you would have listened. All right? But it's not financial advice. All right? But I'm telling you, everything is going down. You gotta wait till it start changing. Okay? Look, listen, gotta have a little fun while we doing this, right? Okay? Gotta have a little fun. All right. Nobody wants to be all tight. I can't function tight. I gotta be loose. I gotta have a little fun. Make sure that's just my personality. All right. So mind me, please forgive me. My wife said something wrong with me. It might be. That's what I'm saying. Don't listen to me. I could be a madman for all you know. So I can't give financial advice. Just keep watching, though. Keep watching. See if I'm a madman or not. Here's the 5-day moving average pointing straight down. This is the IWM, the ETF that tracks the Russell 2000, 2,000 small companies in the U.S. Oh, man, they in trouble. Facts. Okay, I'm going to show you something with that right now. They in trouble. Okay, 5-day moving average pointing straight down. The 9-day moving average, which is green, is pointing straight down. The yellow 21-day moving average pointing straight down. Look at that 50-day moving average over top. Hit support right there. Beautiful. Woo. Look what happened last week. Congratulations to everybody who was paying attention. Look at that. Look at that sideways consolidation, that downward 50-day moving average. Man, listen, come on, y'all. Come on, y'all. I ain't that smart, but I can see. Okay? You got that downward trending 50-day moving average right here. And I told you prices were squeezing in between the 21-day and the 50-day. Soon they got to take a dump and get off the pot. Like I used to tell my son, yo, man, we standing for 30 minutes. Take a dump and you got to get off the pot, boy. Tired of standing here with you. You know what I'm saying? So I'm trying to tell the IWM a week and a half ago. Take a dump and get off the pot. And what it do, it dumped. Okay? So it was easy to see. You trap between a 50-day downward trend and 50-day moving average and a downward trend and 21-day moving average. Come on, man. Not that hard to see. Distribution coming on in. Come on. Look at our distribution analysis here. Higher volume than the previous day. 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 Distribution. There's no accumulation here. Do our volume analysis. We go back to the website, y'all, please, and look at the videos. Help yourself. I'm doing all I can. Help me, help you. Please. Okay. Look at the volume analysis. Go back to the videos and go over our volume analysis. Go to the study cards. You got access to the study cards on the website. Go over the study cards. It's right there. Oh, goodness. It's right there. Go to browntradeacademy.com and go over the stuff. It's right there. I'm telling you, it was easy to see. It's a dump right now. Be careful. Okay? Be careful. All of the major indexes right now are in the down. It's not a time to try to short now. Okay? I reiterate that. I'm telling you, we're in cash. We're sitting on the sideline. We are not in anything. You hear me? Completely cash, waiting right now. Okay? Until the time is right. waiting until the time is right. That's what we're doing. All right? Waiting. So be patient. Okay? Be patient. Patience is the key. So now, here's the guppy. Here's the guppy for all three major indexes, the Dow Jones, the Standard & Poor's, the Nasdaq, okay, composite. Here's the guppy for all three. We're going to hit it real fast. Here's the guppy right here for the Dow Jones Industrial Average. Look at the magenta line of closing prices. Look at it. Look at the magenta line of closing prices. Look at it. It's well below the green and the red moving averages. This thing has been trending down for a long time. Okay, let's expand this a little bit so you can see it. Let's zoom in. Look at the magenta line of closing prices. Why try to fight this? Okay, come on. All right, here, the magenta line of closing prices. It's broke below all the shorter term key moving averages. It's broke below, all the long term red moving averages. We're below all the key moving averages, magenta line of closing prices, and everything. All the moving averages has turned down and they are expanding. Look at the expansion, how they spreading out on you. Okay, the momentum is clearly to the downside for the Dow Jones Industrial Average, the actual index itself. It could get a relief rally at any moment, and it could bounce. But I'm telling you, you don't want to try to be short this. As far as we're concerned, this is not financial advice. It's telling you what we're doing. We don't want to try to short it now because it could get a relief rally and bounce at any moment. You're coming up on some really serious key long-term support. Remember those March 2020 highs I just showed you? You hit that junk and bounce off, get your head handed to you overnight. Won't even see it coming. Trying to tell you something. You dig what I'm saying to you? Okay? Be careful. Listen, you following me? All right? Dig what I'm saying? Be careful. Here's the Standard & Poor's 500, the index itself with the guppy. You see anything different? The magenta line of closing price below all the key short-term faster moving average, below all the long-term red moving averages. Everything's expanding. Everything is pointing down. All right? Now, let nobody in the news tell you this is a good time to buy because everything is cheap. Cheap what? It could get cheaper. Okay? Don't listen to these fools. Trying to tell you something. Look, I don't want to call nobody a fool. My mom always told me, don't call nobody no fool. That's not good. Don't listen to these idiots. Okay? Don't listen to these idiots. Get your head handed to you. They have to take your money. Here is the Nasdaq composite. The magenta line of closing prices are well below all the faster, shorter term key moving averages, below all the longer term red moving averages. Look, man. Look, guys and girls. Come on, family. Don't be ridiculous. All right. I know I'm having a good time, but don't be ridiculous. All right. This is not a time to be courageous. Okay. It's just not. It's just not. You could get seriously hurt. And this ain't the time of trying to be, as far as we're concerned here at BTA, to trying to short nothing. The short already happened. If you held a little bit, good for you to see how far it goes. That's fine. You took the majority of your profits off the table from last week. I hope you did, because we don't know if you're going to get a relief rally. If you got a little piece still sitting out there to see how low it goes, that's great. Smart move, no problem. I applaud you. Okay. But if you took your cash and put it on the sideline like me, and you're just waiting because you didn't want to take a chance with the Fed interest rate hike that the market could get happy and run up on you, and you're not really a short side trader like I'm not, then that's good too. Congratulations. But don't try to be greedy and start shorting right now, and don't try to go long against all this downward momentum. This is not financial advice, but wouldn't it be wonderful it was? But I'm telling you it's not. But I'm also telling you, You try to get greedy right now and try to chase this momentum to the downside. Pop, pop. Get your head handed to you in the relief rally overnight, and it happened exactly when you did it. You go short today, tomorrow be the boom. Okay? It seems like the market knows it want to hurt you, right? That's how it happens sometimes. I remember those days. Every time I look around, look like it just waited, and just until I made the trade, and then boom, it went against me. What are they trying to hurt me specifically? No. These are the rules. These are the rules. Be careful. Watch yourself. Okay? It's dangerous out there. Be careful. All right? That's all I can say. Be careful. It's dangerous out there. Watch yourself. All right? Now, let's look at the market breadth. All right? We're going to pick it up. Let me try to restart this. We're going to pick it up. Part 2, market breadth. Right? We're going to pick it up with the market breadth in part 2. And we're going to look at a few, well, at least one stock that looking kind of interesting, but not now. Too much downward momentum. Don't be crazy. See you in part 2.